Today, we will evaluate the portfolio quality of the best and worst performing platforms in March. We will look at how the biggest platforms in the industry are performing based on the publicly available information. This video will help you to improve the quality of your own P2P lending portfolio. As always, remember that this is no investment advice. While loan performance is crucial to making good returns in P2P lending, the industry is changing rapidly. Monitoring industry events will decrease your chances of losing money. You must understand that the better the portfolio performance, the higher the chances that you will earn the advertised return and that you can predict your portfolio's liquidity. If the performance is bad, you cannot expect to earn the advertised return, and you can also not expect to withdraw your money whenever you want. If that's the case, I would argue that investments in those portfolios don't make much sense. So the biggest platforms in terms of assets under management are Mintos, Estate Guru, and Peerberry. Mintos has been lately focusing on newly introduced products such as investments in fractional bonds, which are not included in our data about Mintos' outstanding loan portfolio. While the amount of pending payments on Mintos is decreasing, there is not much progress in recovering the loans from suspended lenders. At the time of recording, over 133 million euro of investors' funds were in recovery, meaning that investors could not access those funds on Mintos. An additional 11 million are stuck in pending payments, decreasing investors' liquidity on the platform. Estate Guru is not doing much better. The defaulted loan has increased by 3 million in the last month, reaching a default rate of 50%. Estate Guru aims to recover 38 million euro this year. Based on the performance update from January, the company started the year with a recovery of 500,000 euro, which represents only 1.3% of its recovery goal for 2024. Out of the three biggest platforms, Peerberry has the best performance, constantly lowering its debt from war-affected loans. While the loan availability is not up to investors' expectations, the platform has shown resilience throughout difficult times, which boosted investors' confidence in Peerberry's protection schemes. The best performing platforms in Europe with no delays or defaults are Robocash, Esketit, Inrento, Craftbeer, and Fintown. The top performing platforms continue to grow despite the rather low season in the lending business. The best platforms are followed by the Income Marketplace, which mainly funds loans from Dana Rupiah in Indonesia. So if you're looking for exposure in a regulated Asian market, this might be one option to consider. It's worth noting that most of the platforms offering consumer loans are suffering from cash drag, which is now even more evident as the lending volumes tend to decrease during this time of the year. Investors can consider some of the alternatives, such as Profitus or Capitalia, which are both regulated platforms offering good statistical insights into their loan portfolios. Lande's outstanding portfolio amount has slightly decreased last month, while the defaulted amount has doubled, raising the default rate to 6.46%. Last month, Twino has shared updated statistical information. It seems like the management releases updates only when it feels like it. According to the latest data, Twino has recovered only 33% of the war-affected loans. Peerberry, on the other hand, paid back over 93% of loans from Russia and Ukraine. Twino's communication also reveals that the company is slightly shifting its focus from consumer loans towards rental projects. The statistical data on Debitum regarding its non-performing loans from Chain Finance has been likely strategically removed from its statistics. While Debitum has not caused significant losses for P2P investors, it's important to remember that it was built on a crypto scam, which caused losses to initial backers who funded the platform's development. The original founding members eventually exited the platform, earning a solid paycheck from its sale to the new management, which runs it now. When looking at the worst performing platforms, we will find EvenFi, which is reporting payment issues for over 55% of its outstanding portfolio. Reinvest24 is strategically not revealing the default rate, but since Moldova's portfolio isn't performing and they have no idea about their Spanish assets, it's evident that at least 52% is at risk. Given the legal battles in Moldova and the platform's inability to raise further funds as it does not meet the regulatory requirements, the funds in recovery might as well be 100%. The platform isn't transparent about it, so it's hard to tell. Reinvest24 is by far not the only platform that is not willing to share performance-oriented data. None of the following platforms reveal any significant statistical information that would give insight into their portfolio quality. Lender Market did not bother updating the information about their outstanding portfolio amount last month. However, given the recent decrease in assets under management, the company may be lowering the amount of pending payments. The repayments on lender market may as well be provided by investors who deposit money on Monefit Smart Saver. Monefit continues raising funds from investors who do little to no due diligence about its services. The company is owned by Creditor, which also controls lender market. Monefit Smart Saver follows the same strategy, basically offering cashback bonuses and high interest rates. Since Monefit can use your deposits for whatever they want, and the management behind Creditor and lender market is known for not following its own terms and conditions, it's evident that the risk associated with deposits on Monefit is greater than most people realize. Boster is another platform that is likely not worth it. Last month, the Czech-based P2P Lending marketplace reported more issues with Huddle Capital, Crediface, and QuickCheck. It's more than evident that the lenders on Boster can do whatever they want. The assets under management are not disclosed, but you can check which companies couldn't care less about repaying the debt to investors. Swapper, Stick Credit, Uvo, Vile Invest, and Bondora are platforms that prefer not to reveal any performance-oriented information or data about their outstanding portfolio amount. This disservice to the community is often offset by a higher interest rate or cashback bonuses. So while less transparent platforms or companies with a higher default rate offer more investment opportunities than the top performers, it's crucial to evaluate historical portfolio performance, as it is a good indicator of the platform's risk management. You have to understand that there is a limit of funds which a platform can successfully deploy. If you see a company advertising attractive returns for deposits of up to 500,000 euro while not providing any information about how your funds are used, then you should seriously consider the sustainability of such business. Chasing the highest returns without research does not pay off in P2P lending. While the portfolio performance varies with every investor, this snapshot from the industry gives you a good idea which platforms are worth considering and which you should avoid if you're thinking of investing in the long run. If you value this type of information, hit the like button and subscribe to not miss out on future videos. Thanks for watching, and I'll catch you in the next one.